Hello, everyone. Thank you very much for joining us today. My name is Randy Wostratzky, a director here at the Spectrem Group, and I'm joined by Kent McDill, our senior writer. Today, we're here to talk about the latest Spectrem Investor Confidence Indices for the month of February, highlight some of that data, as well as talk about some of the insights from our recently published perspective report, Primary Objectives of Portfolios. At the end of the webinar today, I'm going to talk a little bit more about our Wealthy Investor Series and our proprietary visual analytics technology. And when I'm going over some of the slides from our Primary Objective of Portfolios perspective report, I'm also going to mention kind of one of the features that we have of the visual analytics technology. But before I go into that, I'm going to turn it over to Kent McDill to talk about the February indices. Kent.
Thank you, Randy. I'm going to discuss the Spectrem Confidence Indices for February, and the theme of the February index report is rebound. December's stock market decline put investors in a foul mood, and January's attempted recovery was tempered by the month-long government shutdown. So when the stock market stabilized and remained above 25,000 throughout the entire month of February, investors rejoiced and once again displayed enthusiasm and confidence in the market. As indicated here, the Spectrem Millionaire Investor Confidence Index rose 9 points in February to 11, and the SAICI rose 7 points to climb out of negative territory to 6. As this chart shows, the SMICI reached double digits for the first time since August. In December, the SMICI actually dipped almost to negative territory for the first time since January of 2016. The SAICI moved into positive territory for the first time in 4 months, and the 7-point jump in that index was the largest gain month to month since August and September of 2014. Clearly, investors were looking for a reason to regain optimism, and February's stock market provided that spark. This chart shows that there was a slight increase in investing intentions along all categories, but most notably in stock investing, where interest was renewed to 30% of all investors, a jump of more than 7 points over January when the confidence recovery began. The 30% mark is the highest in September, before the confidence index began its late 2018 slide. You can also note here that individual bond investing doubled in February, reaching a level last seen in April of 2018. The overall percentages indicated a complete recovery among investors. Another positive sign came in the category of those not investing, which is investors who state their intention to maintain their current level of investing without adding to it in the coming month. When that percentage drops, more investors plan to actively participate in the market, and in February, the overall percentage dropped from 39.2% to 33.6%, which is the lowest level of non-participation since April of 2018. While the Spectrum Confidence Index indicates the confidence of investors in what has happened recently in the economy and the stock market, the Spectrum Household Outlook is a measure of how investors feel about the future regarding 4 components of their household finances. This chart shows that in February, the outlook overall doubled to 21.1, but remains well below the outlook registered throughout the first 8 months of 2018. Note that the 10.9 mark in January was the lowest outlook in more than 2 years, and it is a positive sign that investors are taking a more optimistic approach to the near future. Every factor rose among all investors, and the outlook in household assets rose by more than 20 points from 29.2 to 49.6. That increase puts household assets back at levels it was reporting last summer. The outlook for the economy remained in negative territory overall, but did move up by almost 9 points to negative 3.2. The outlook for the economy among millionaires rose by more than 10 points, but still remains in negative territory at negative 1.59. More details about the Spectrum indices and outlook are available upon request. Now I will turn this conversation over to Randy, who will discuss our study on investors and their primary objective for their portfolio, as well as a look at Spectrum's Wealthy Investor Series and visual analytics.
Thank you very much, Kent. I appreciate that. And just to echo a few of Kent's words, if you do want some more detailed information about our monthly indices and the numbers behind all of those high-level data points, please do reach out to us here at Spectrum and let us know. There's many different ways that we can provide you with various solutions that can certainly be beneficial to you, your firm, and the advisors you work with and serve. Now going into some of our latest research here. This is a recently published report that we came out with titled The Primary Objective of Portfolios. As a reminder, here at Spectrum, we're in the field every single month surveying wealthy investors who have anywhere from $100,000 up to $25 million or more sometimes in net worth, not including their primary residence. We have a varying degree of topics that we cover throughout the year based on both subject matter that we know is important to those in the industry as well as current client feedback. This particular report was generated from surveying that we accomplished from January through April of 2018. As with almost all of our quantitative research, this was done via an online survey, and the wealth segment here was those, again, in that 100K up to $25 million in net worth NIPR. We're looking at just over 2,000 people for the total sample as far as the respondents for the survey. Just a couple of high-level data points to start us off. As far as risk tolerance and knowledge, looking here as far as moderate goes, you can see that's the dominant color there in red at 57% of those 2,180 respondents who said that they were moderate. Then you're looking at 23% that said most aggressive or aggressive, and then 20% at the conservative level. Looking at some of the occupations here, we did combine the senior corporate executives and managers into one group here, which you can see comprises the largest occupational segment at almost 40%, followed behind by educators, IT, and professionals. Normally we have, when you get to the higher levels of wealth, a higher percentage showing of business owners. But here, because we do have that the lowest wealth tier down to 100K, you can see that they are only represented by 6%. Of the total respondent base. And then looking at the wealth level, we're just right around 25% of the mass affluent and the ultra high net worth. So that's 100K to a mil, 5 to 25 respectively. And then millionaire respondents, the $1 to $5 million segment at just over 50%. Here looking at the primary objective of the portfolio, we asked the respondents, from these four different choices, what do they consider is that primary, that number one objective, that number one goal of their investment portfolio? Is it to grow your assets? Is it to generate income? Is it to provide security or invest in secure investments? Or is it something that we might not know of? And as you can see, you certainly are able to decipher variabilities among these different professions. You have professional senior corporate execs, IT, and business owners that all cited growth as the number one objective. And then you have educators that said security is the number one objective for their portfolio. So this is something you need to keep in mind as you're talking with clients who represent some of these varying occupations. There's certainly no one-size-fits-all category as far as the objectives and the goals that investors from different backgrounds have regarding their portfolio. It's important to make sure that you're asking questions and really having in-depth discussions with your clients about how they are looking to invest. Now we're going to look at the exact same question by an age cut. This really kind of falls very much as one would intuitively think it would, with the millennial segment knowing that they have a longer time horizon as the most apt to identify growth as their primary objective. And then the oldest generation, the World War II or greatest generation, at 26% that say growth is the main objective of their portfolio, as opposed to security at 36%. Also, with that group, you're looking at the highest that say income. So certainly we know that when you get into your post-retirement age and years past that, it is very important knowing that income streams may become a little bit less or fewer and farther between to focus on monthly income generation from a variety of sources outside of just Social Security. And so obviously that would include various things like laddering of portfolios, CDs, other income-based solutions like annuities, or even those in that generation that maybe were lucky enough to be able to take benefits from a defined benefit plan. Here we ask a question about how the respondents to the survey would characterize their investment strategy. Please note that these responses are mutually exclusive. I think that there are a lot of folks that would identify, multiple strategies that they consider when it talks to the way that they and their financial professionals manage money. But we did ask them to select one specifically that characterizes the way that they invest their money. And number one, by a wide margin, is more of the passive buy and hold strategy. So talking about more of a long-term time horizon, not moving as much in and out of stocks, really kind of more or less choosing a course and staying the course. At 19%, you see a dead heat between a conservative strategy and an active strategy. And so that certainly speaks to the wide range of different ages that we have of respondents of this survey. That maybe have some of the younger investors that are a little bit more apt to move in and out of stocks, to trade based on momentum, and to look at various macroeconomic factors that could come into play, as opposed to those that are much more concerned about making sure that their investments are secure and investing conservatively to reflect that sentiment. Now, briefly deviating from the highlights from the primary objective report, right now what you're looking at is a high-level overview of Spectrem's visual analytics and a dashboard that we have here showing some of our hot topics. Our visual analytics software is something that I would be happy to speak with any of our clients or non-clients about, and this is a way for the folks that we work with and the financial institutions and advisors that we serve to analyze our data and segment in a way that is most relevant to them. So here you see some topics that are similar to what we reviewed in the report, and looking here on the right-hand side about advice received from their advisor and the advisor response to the market volatility from December of 2018. And here you can see that almost 70% of advisors said their number one response was for their clients to do nothing, to calm down, which certainly benefited many folks that chose not to try and get out of assets and stayed the course and have been rewarded thus far in the first 2 months of 2019. One of the unique aspects of Spectrem's visual analytics, as you can see here towards the top of the page, is the ability to filter all of the data and all of the questions that we ask in our research by a variety of demographics. So as I mentioned, the top occupation that was highlighted in the primary objectives report was the senior corporate executives and managers. So if you wanted to look at all of this data by those two particular occupations, and scrolling down a little bit, we're going to select manager from the occupational drop-down box. And then we're also going to include senior corporate executive. And when you hit update on the right-hand side, you're going to see all of the data gets refreshed. So now, what you are looking at on this screen is only highlighting feedback from those who identify their occupation as either a manager or a senior corporate executive. And once again, you're allowed to do this throughout any of the different drop-down demographic segmentation options we have. As you can see, things like age, income, ethnicity, gender, marital status, and a variety of other ways. Now, moving on to the next slide, we're looking at the investment strategy of those who identified either passive or buy and hold as the strategy that they feel most appropriately characterizes how they invest their money. Looking at it by occupation, you see educators are the most likely to embrace that buy and hold strategy. But it's really interesting because when you look at gender, you see there that males by almost 10% are more likely than their female counterparts to embrace that passive or buy and hold strategy. And then when you're looking at advisor dependency, you can see there the buy and hold by those self-directed is at 40%, while those as advisor dependent, those that really depend on an advisor for their financial decision making and advice, are much less likely to have that buy and hold strategy. Talking about those who really like that active strategy, among all the occupations, the only deviation you really see is among that educator component. All the other ones are right there around 20, 21, 22%. The active strategy, certainly when you're looking at retirement status, is much more prevalent among those who are not yet retired, as opposed to those who are retired and most likely a little bit older, and therefore looking for a little bit more of a conservative strategic plan. Now here we're looking at the breakdown of everyone's kind of net worth as far as the way that all of their different types of assets, both investable and non, are allocated based on the different types of strategies that they employ. So you can see there, those that say no strategy are the ones with the lowest amount of investable assets. So that certainly comes into play relative to the way that those who don't foresee themselves with a specific strategy in place it's not as important because of the fact that maybe they don't have as much money to put into play. Now you're looking at, among the other ones, anywhere from 63 with the conservative up to 69% for the passive buy and hold, with the active and the index strategies at 66 and 68 respectively. As a reminder, all of this type of data, insights, and research solution can be accessed through Spectrem's Wealthy Investor series. That is comprised of a variety of different in-depth reports highlighting all of our information with wealthy investors and individuals who have between $100,000 and $25 million in net worth. And again, all of those reports and all of those research solutions and deliverables are supplemented by the data and analytics component within the Wealthy Investor series, and that is our visual analytics technology that we looked at a little bit earlier. I would be happy to speak with anyone that would like to further kind of investigate the way that this works and really understand the value it can provide for you and your firm, and again, those that you serve. So if there's anything at all that myself, that Kent, or anyone else here at Spectrem can do to be of service, please do not hesitate to reach out and let us know. That's going to be it for us here at Spectrem today. Thank you so much again for joining us. We look forward to speaking with you soon.